Okay, so to recap these other two videos that precede this one is that we have established that we have re-entered a phase of bullish bias on the monthly chart, which we're looking at right now. So we have in all three indices, NASDAQ is on top, ES in the middle, YM at the bottom. So in all three of them, we're coming off the COVID low to the all-time high. Then we were in a down cycle here for sure, but we have shown that since the beginning of October, we have actually turned into bullish sentiment on the monthly and weekly time frames. Now, what we need to do now is figure out where our next trades would be that's set up, and we would be looking based on the levels that we've identified as the next targets, both on the lower swings and the higher target goals. Actually, look at that. We're still not very well complete. Oh, we are. This is not showing. Okay, good. All right. So here we go. Yeah, that makes sense. Right. Should probably. Maybe we already have that. I don't actually know because I have this other folder here. Yeah, there's more already here. Yeah, I've organized it a little bit differently here, but it doesn't matter. We can operate with both here. This is fine. All right, so since the YM is the furthest along by our analysis, let's just start with that one, and let's look at, from the weekly time frame here. Let's look at the daily time frame and see what has to happen to get this to work here. Now, on the daily time frame, we have a couple of things to look at. So we're kind of expecting a bit of a cycle, although it put in a blue candle in the YM on Friday. And that's contrary to the other two indices, I believe. Yes. So the other two here were solid on the further up. But again, the YM kind of supports the concept that the YM is further along. So it didn't need to go further up and instead could already start on the retracement. Now we're expecting a retracement here at least to the level of this blue candle, which is the last bearish order block now. That's on the daily basis. So now let's put on daily basis here. I'm sorry, it's not bearish, it's bullish. I keep this is really the paradigm shift of these bullish and bearish order blocks concepts, is that you really think of them of bullish, of red candles or blue candles in my case, as bullish because they show that institutional buying has taken place here. So institutions built up inventory by buying from people who were willing to sell on this candle, right? So institutions bought on this candle. That's why this is a bullish order block. Once we trade back to it, institutions have already bought, and they can now, buy again on the way back down here, and can don't have to trade further down anymore if they don't want to. If they want to, they can also go further down. But that's the argument for why this is now a bullish order block. So we have now, this is our next one up, and this one is on the daily basis. So yeah, they should all be validated once we see them. I guess it's kind of a strange situation when you're coming out of a range and you don't have any bearish or bullish order block anymore. But that's what that is. I kind of see already also like a head and shoulders, but in a sense that has already played out. So it could retrace, like I said, at least back to this one. But then again, it could also want to connect back to the validated bullish order block on the monthly basis, right? Which is this line. So this line here could also be the retracement. So we are expecting and waiting for continued retracement to here, and then possibly to here, to then have a good buying opportunity to go swing on back up. I kind of would like to have this low, this daily low respected. So that would, at least for the close of a daily candle, mean that we only want to dip our tail into this order block here, maybe just connect to it, by a point or so, as we showed in the previous videos, in one of the previous videos, and then just go up again. But I'm kind of thinking we would go further up first before we retrace all the way back down here. It would make more sense to me to see further up move first. So I would try to, this is the other way to kind of show this, is we do a multi-day fib range here from the last minor swing low to where we are here. Let's take these out. That means now we have our optimal trade entry right here, which is below this candle, but above all this. That would make the most sense to me, as if we would see a retracement into this range here, this area here, and then go back. Now there's a I think this would be considered a value gap, which is going on right here. If I understand this correctly, there's a gap between the high of this candle and the low of this candle. These two blue candles, they have a gap here, and you see, so they're right in the middle, smack in the middle of this range is the 70% range here. So this would be really the perfect place to tap into this area right here, and maybe even close it so that we can connect a blue candle to the tip of this blue candle right here, and then turn up from there. So that would be what I would be looking for. In the meantime, we can take scalping setups on the daily chart going down if we dial further deeper into the 4-hour, 1-hour charts. But this would be the perfect place to be on the YM on the daily chart. So what I'm going to do is I'm going to create an alarm here just to watch what's going on. Oops. Edit this alarm. 1 a.m. at daily, near daily equilibrium. Okay. Let's do another one. YM near daily 61.8 retracement. All right. Okay. Good. Now, what does this look like in the ES? Let's look at the same question in the ES. I don't remember what that was for. Okay, so in the ES, let's see what's going on here. Those blue candles are all filled in. There's no gap here, but we need to connect to this candle right here. So let's put up, wait, is that this? No, that's a temporary, that intermediate thing. All right, let's connect one here from this minor swing low to this swing high. And you see, we need to touch this candle. So this is our daily daily order block. Let's grab this one. Right here. Bullish order block daily. So it looks to me like for this bigger setup, we're going to be waiting for this candle at least to be touched. So let me just make an alert right here. We'll call it ES retracement. Below it. So I should call it to discount area below equilibrium. Yeah. Okay, so again, same thing. We're waiting for this retracement to go here in this area, connect with that high 0975. 0975. Optimal trade entry on daily. All right. All right. That's what we're waiting for in the ES. So kind of expecting a downturn here as well before it can go further up on the ES. And what about the NASDAQ? Should look similar. We have our minor. Let's see, this here is kind of, this would be a major. If I had a 3-day chart, it would probably, there would be a bullish order block here. Yeah, this is an interesting one. This would be a bullish order block right here. Huh. Maybe that is a good one. Let's throw up the fib line here from, in a sense, let's see how this played out. Yeah, we already watched that, right? So we saw that this retracement was was actually well below, let's see. Oh no, look at that. So the fib levels are above the lines. So it's actually just exactly to the, well, no. That's wrong. We're on this level, okay. No, but still, holy, how can that be possible? It's not that much difference on the lower end. Interesting. So anyway, we hit the 88%. So that means we could hit close to the 88% again if we look at it like this on the 3-day chart. Or we could anchor this a little bit higher by going here. That doesn't make a big difference. And we would then go to this area right here. So the least we would need to go is this blue candle. But again, now it becomes a little ambiguous as to where we are. So on the daily, we would have to go this far, which is completely fine. That's completely reasonable for a retracement. It would take us right into the 61.8. Right? So I'll just make one up here, an alert. NASDAQ. Connecting to bullish order block daily and below 50%, below equilibrium. Let's call it equilibrium. Okay. All right. So same story. We're looking for the retracement here first, back to the 50 and connecting at least to the tip of this candle here, if not to the body. And then we're close to this whole 78%, 70% fib retracement rate range for an optimal trade entry. Yes. Okay, I like that all. All right.